Hello, everybody, and welcome to this week's Motor Trade Radio podcast, powered by eBay Motors Group. It is Saturday, 18th of June, and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 30, season 8 of Motor Trade Radio, bringing you all the chatter that matters. Once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
Well, we've got a few shout-outs, but it's also been a busy week, and we've got a bit of an exclusive as well. So it's got another busy show for us this week, Curtis.
We have indeed. So today we're joined by Darren Martin, who's going to talk us through one of the week's biggest stories, and certainly one of the most one of the most eye-catching headlines. So we'll get to that shortly.
Yeah, and if you didn't get a chance to watch it and you can find it on Catch Up, then I would urge you to check out Auto Retail Network's webinar that went on this week that was looking at the state of play of the new and used markets and the likely direction of trouble. And great conversation. I mean, you never expect any less, especially when you've got Peter Smythe from the Swansway Group. You've got friend of the show, John O'Hanlon from Waylands, and then you've got Jonathan Gravel from Gravel Motors and Matt Palmer sharing some insight from Auto Trader on there. But I know you've managed to watch a bit of it on Catch Up, Curtis,
Yeah.
but Peter was on good form, should we say.
He was on absolutely top form. I really enjoyed it, and I do I do urge you to find that online, because it's a great snapshot of some of the views that maybe you don't necessarily hear every day in the press. And Peter was very forthright, and he had some great comments to make. So if you can find it, do spend a bit of time watching that one.
Yeah.
It's actually really entertaining.
Some valid comments as well. Some
Yeah.
interesting, valid ones that were definitely relative. So to what's happening at the minute. But and also, if you haven't had a chance, to the recent interview we did with Steve Young from ICDP, who was talking about the new and used trends and multi-franchising, agency, and much more. You can still check that podcast out on your podcast feed, so we would urge you to have a listen to that and tune in. And fascinating interview as always with Steve Young from ICDP.
And many thanks to Autotech Recruit, who sent us a press release this week. And it's based on automotive aftermarket survey that they've done, which reveals employers believe the skill shortage will deepen. It's a detailed release. It's a detailed story. It did pick up some coverage. I noticed Motor Trader ran a story on it during the week, but it's a good piece of research, this, isn't it, Phil?
Yeah, it is, and like I say, it's based on a survey they've done with automotive bosses in recent. It's quite recent as well. That's the key with this. But obviously, looking at some of the challenges in that recruitment market, and it's quite interesting. The Menable moment last week with Steve Whitten there talking about that recruitment side and maintaining staff and the challenges that we face there. But they're talking about 90% of the respondents believe that challenge of recruiting skilled vehicle technicians will get worse over the next few years, with 3/4 admitting that the shortages are having a negative impact on the profitability of their businesses. So this is about getting that skilled labour in, and we talk about electrification, we talk about connectivity with ADAS systems and things like this. And you know what, the market is changing. This, it's hard enough getting labour as it is, but actually trying to get that skilled labour is even harder.
Yeah, and they do touch on EV, which is obviously a huge issue now in the aftermarket sector. Certainly across workshops. And I've done a bit of research on this. So I was intrigued to see their findings. That they suggest that by 2030, the EV car park will represent 27% of all vehicles on UK roads. However, just 4% of those surveyed for this research revealed that all their technicians were trained to level 2 electric and hybrid vehicle standards. So there is a huge shortfall there.
Yeah, so again, look out for it. It's in some of the media there. It's comments there from Simon King, who's the MD of Auto Tech Group. So again, a good look at that aftermarket and the challenges facing and what to expect in recruitment.
Yeah, and as I say again, many thanks for sending that press release in. So if you'd like to get in touch with us, come on the show or send us a press release, you can email it to us at motortraderadio@yahoo.com. You can also join the Motor Trade Radio LinkedIn group or follow us on Twitter.
So headlines then, Curtis, what we're talking about this week.
Okay, headlines this week. We'll hear from Darren Martin on why the used car sector would be a bloodbath without the current supply shortages. Government axes plug-in car grant for new electric cars. That one got a bit of interest during the week. Why Ford is closing the order book for new Fiestas. We'll look at the we'll look at the latest financials from Motorpoint, Stephen Eagle, and Ancaster, and they're all full years. And we'll close with a sad farewell to industry leader Jim Tyrrell, who sadly passed away last weekend.
So I say the first headline, as Curtis said there, certainly did grab the headline, if nothing else, particularly in the social space. But they're talking about that used car sector would be a bloodbath without automotive supply shortages. So this is from Cap HPI, an interview that Tom Sharp did there from AM Online with Darren Martin, sort of looking at what's happening in the used vehicle market, and the point is that with the demand as is today, if we had normal levels of supply, we could be seeing bigger significant issues in terms of used vehicle values. But we have got more of that now.
Welcome back to the podcast, Darren. We invited you on for a chat to talk about one of the big stories of the week from AM, which was under the headline, used car sector would be a bloodbath without automotive supply shortages, which is a great headline. It's based on comments from you. Can you just take us through your thoughts around what you're seeing in terms of mid-month supply and demand and how the market could actually be worse than it is?
Yeah, hi, thanks, Curtis. I think it's the word bloodbath, isn't it?
That's a headline grabber. That one.
It's always a good word to get into a headline.
It's caught the attention. I'm usually quite measured with what I say, so let that one slip. Yeah, what we're seeing in June is a continuation of May, really, and we've got that. Well, we've sort of looked back over time, almost unprecedented situation of low demand and low supply. And the point I was making in that AM article really is that with if it was normal supply levels with fleets returning a lot of cars back in to the market, then with demand where it's at, values would be dropping considerably. And that was really the point that I was making. And I think there's something like a 1.8 million shortfall in new car registrations, and obviously a lot of those coming from the fleet and leasing area. Those cars aren't coming back in, and so you haven't got the vendors that need to sell as many cars, so prices aren't dropping. Whereas with demand being where it's at, they would normally be dropping considerably, especially because they went up by so much last year. So that's kind of where things are.
And hi, Darren. I mean, in terms of the dealers, because we always talk about what the dealers are reacting and how they're reacting, and obviously, it's always controversial when you put things out in the media as to where they react, because they will be performing slightly differently to each other. But in your conversations with dealers so far this month, I mean, what are they saying about the situation with supply challenges, and what are they sort of feeding back on demand at the minute from the consumer marketplace?
Supply or new car supply, I mean, it's very brand specific, but that doesn't seem to be getting much, if any, better at all. And there's still big sort of order banks and long lead times. And saw an article in Car Dealer today where they're talking about you can't get a Fiesta. You can't order a Fiesta now, and that's going to be almost until next year. I mean, Fiesta is obviously the biggest volume car in recent times. So you've got issues there with supply challenges. On the used car side, we reckon in the trade market, well, the data we're seeing is about 30% down on more normal times. So there's less cars from there. Damaged cars aren't particularly attractive at the moment in a falling market. Which, I mean, as I say, it isn't falling by much at the moment. But in the last 2 months, it's dropped, or not the last 2 months. March and April values dropped by sort of 4.2%. So dealers not necessarily wanting to buy work in that time. So that's the supply challenges, and then consumer demand. We feel it's about sort of 70% of normal maybe, and that's where dealers are trading. That seems to be a common figure given. So it's not a disaster. There are consumers buying cars and certainly investigating websites and forecourts, but it's less than normal. And kind of, are people going on holiday, paying for a holiday rather than going for a car, or are they putting off that big ticket purchase altogether because of the cost of living squeeze? So that's sort of what's happening. For conversations with dealers, some are reducing prices, but others are pretty much saying that even if they do reduce prices, they don't think that is going to stimulate demand particularly. So maybe they're reducing transactional prices when they get someone in, or a query, and someone's wavering, but not necessarily reducing advertised prices to a large degree, just because it won't necessarily have a big impact.
And I was interested in the AM piece that you're quoted in, Darren, and especially in light of the cost of living crisis that you've just talked about. I was kind of interested why values have dropped for some of the older cars, and you single out those 10-year, 100,000-mile cars dropping 2.4%, whereas I guess you would expect those to be in more demand at the moment, as pressures are on budgets. But meanwhile, £50,000 plus cars have actually risen. So what's the thinking there, do you think?
Yeah, well, it is quite interesting. It doesn't necessarily make sense, but my personal view on it is that maybe people are maybe downsizing from their 20 or 30,000 pound car that has gone up by quite a lot, and maybe they're downsizing their second car. So city cars are actually doing the strongest sector last month, and are one of the strongest, certainly mainstream sectors this month. But maybe people aren't downsizing quite to that 10-year point, that those really old cars. And the buyers, the traditional buyers of those types of cars, are probably worse affected by the cost of living crisis. There may be people that are living slightly more hand to mouth, so they are. That's why those have been affected, and maybe they're putting off buying a new car at that stage, or don't want to pay as much for it. Also, a lot of those cars maybe need work required. So, as I said earlier, dealers not necessarily looking to buy work. So, I mean, it's not a massive drop. 2.4% last month. It's 1.2% this month. So it's not huge. Whereas that above 50 grand, maybe that end of the market, if you can afford to spend 50 grand on a car, you're probably not as bothered about the cost of living at the moment. It might not be as affecting you that much. So we're still seeing some strength at that end of the market. So that's what I would put those two sort of things down to, those two different ends of the market. We've also, at that older age, we have seen diesel cars where there's a big road fund license, and maybe you're not doing the miles that you used to do. So diesel is down more than petrol at that top end. Sorry, at that bottom end, cheaper cars at 10 years old. So a lot of that is driven by diesel as well.
And I mean, you touched on it earlier around the pressures on supply and demand, and around obviously the dealers, whether they're holding firm on prices because of the belief that actually they know that stock is still a challenge for the right stock, that ready to retail in the right price bracket and the right models, etc. And are the customers going to come out if they start getting a sort of a fire sale on and start reducing prices drastically? If there's no demand, then there's no demand. Is it not, relative to the price? But I mean, are you seeing any dynamics around, the type of businesses? Because we know that some businesses can rely on other areas of their revenue earnings, and not so much on volume of vehicles, but others are wholly reliant on vehicle volumes going through their business, and therefore they need to keep the activity going. Are you seeing any dynamics playing out, or is it still early to see that yet?
I think a lot of dealers are quite busy in their workshops, and I have had one dealer group that suggested that maybe that was because people are getting their cars repaired rather than selling them, or making sure that they're sort of up to scratch, because they know they're going to keep hold of them for longer with the current cost of living. So there's a little bit of that activity. Obviously, dealers have got to continue to make money, so they've got to focus on all of their other areas. And some are holding firm on prices, and there's certainly not a dramatic culling of prices on retail. Just demand is down, but as I say, I don't think that's going to be reversed by dropping prices by a few £100. Really, it's not going to. If you're going to put off buying a car, you're probably not going to be encouraged by seeing it drop by sort of £500. But maybe when you go in and are wavering, as I said earlier, then that's maybe when we're seeing the reduction. So it does seem to be holding fairly firm on price. With regards to the trade, there could be a bit of pressure on trade prices going forward, just because a lot of them are still high. And if the used market is depressed, then will dealers still be paying those prices for in the trade? But at the moment, it's holding fairly firm, and with the lack of supply, as we've said, then that could well play out for another couple of months or so.
And Darren, final question for you. Drilling into some of those mid-month figures you're seeing on Cap Live, how is May actually tracking, and what's your current forecast? Sorry, how is June tracking, and what's your forecast for the end of the month?
So at the moment, we're 0.5% down at 3 years 60. So, and we're over halfway through our month with regards to, from a valuations point of view, because we publish 3 working days before the end of the month. So I would expect it to be 0.8 to between 0.8% down and 1% down. So it's not huge. And there are cars that have gone up in value. Certainly, electric vehicles seem to be doing okay. I've got some examples of those that have been going up. So I would expect it to be at about that level, which is around, I don't know, between £100 and £150, something like that, on average at 3 years old. So that's kind of where we think the month will end up, unless something dramatic happens in the next couple of weeks, which we don't really think will happen. We think we'll carry on like this for the time being. So interesting times, but a definite plateauing from those couple of months of drops in March and April, and we're a continuation of May, really, but with the same challenges.
Yeah, no, I was just going to say, I think the market would rather see a plateauing than a bloodbath.
Yeah, definitely. Yeah. I agree. Yeah.
No, I mean, thanks, Darren. I mean, again, it's context there, and I think clearly, if you look at previous months of June going into July, I mean, a 0.8 to a 1 or even slightly higher is still a fairly strong market compared to pre-pandemic normal seasonal market movements for that month. So I think you're right that although demand is down, supply is keeping it in control into at the minute. So I know that we're going to have you back on at the end of the month, the week after next, to give us a sort of a full view of the detail behind how the month of June has gone. I think Curtis has shown how quickly the year is going. Now, my months at the minute, we're losing months, and very quickly at the minute. So and I know from yourself, Darren, I mean, you've had a webinar this week, and just for those that hadn't signed up for the webinar and joined it, you will be able to probably get it on demand, won't they, Darren, I think?
If they subscribe to it, then they can find it online. So if they want to listen to it and they're not and they haven't signed up for it previously, just drop me an email or look me up on LinkedIn, and I can certainly get you access to it. So we had a webinar on Wednesday where we went through the latest economic situation and some information on current market and forecasts on cars and vans.
Yeah, anybody that is listening this morning that doesn't tune into that, I would definitely advise that you do log into that every time it becomes available. So it's very insightful and very worth sort of joining and just getting the latest updates. So it remains to say, Darren, I think at the minute we know the market is moving very quickly, which is one of the reasons we wanted to get you on sort of part way through the month, because I think, a month sometimes, it is too long, isn't it, these days in terms of what is happening out there. So great insight again, great detail there, and best of luck, and thanks for joining us today.
No, it's a pleasure. Yeah, as I say, live, well, as you just said, live values are really key. And even when the average is 0.7 last month, a lot of the detail happens throughout the month, and different cars going in different directions. So it's really important just to keep an eye throughout the month.
Definitely. Well, thanks again, and look forward to speaking to you in the next week or so.
Yeah, cheers.
Like we say there, great insight. And I think great from where the market is today, don't you think, Curtis? Because we are partway through the month. Normally, we'd have Darren on at the month end and looking back at the full month and then getting his views and crystal ball out as to what's to come. But we wanted to catch up with Darren to try and understand where we are today. What does June look like so far? What was behind his comments around that supply of vehicles, and the headliner that AM jumped on there in terms of bloodbath? But quite interestingly, it's not that bad at the minute, is it?
No, and Darren does make an interesting point that, and I know he does say this from time to time when we interview him at the end of the month, that there's so many variations over the course of the month that having this snapshot mid-month is actually really, really useful, and we now have a pretty reasonable idea of how the month will close. So, many thanks to Darren there for joining us and giving us some context and some background.
Yeah, interesting point he makes, though, that although we have got a fairly stable movement overall, there are some increases, which he identified in the interview there, but also there is some significant decreases as well. So, as we always say with Darren's interviews there, the devil is in the detail more than ever these days, and you need to keep close to what's happening in the market. But the other big headline that came out of the blue a little bit in many ways for the dealer market, and I think it probably caught a lot of people off guard, was that the UK government has pulled the plug-in car grant with kind of immediate effect once it is when it was announced, and I think it caught a lot of people on the back foot there. That one, why they're doing that, we can talk about that in a second, but secondly that it was done at such a swift rate, and obviously there was people with orders outstanding that they'd not put onto the system, etc., etc. So I think it caught a lot of people off guard, if to say the least.
Yeah, I think you're right. Whilst removing the grant was always on the cards, and that grant has been in place for a long time now, it's the immediacy of it. So it didn't allow anyone to prepare for it because it was announced on Tuesday, and that was it. That was the removal of it. But the story that we're going to focus on ran in Car Dealer with the headline "Plug-in Car Grant Axed as Government Moves Its Focus to Improving Charging Network." So this is the news that the government have axed the grant. And the DfT said the scheme, which gave £1,500 discount on cars costing less than £32,000, will be closed to new car orders. And the move comes as full electric car sales have risen by 70% in the last year. And that's really the crux of the story, isn't it? Because the DfT has looked at this exponential growth in sales of EVs and has decided that, do they need to be incentivized anymore? Well, probably not, because they're going to sell anyway. So the grant has been removed. I did a bit of background on this because I was quite interested to see how long it had been in place and how much it's changed. So it was introduced in 2011, and from March last year, 2021, it was cut from £3,000 to £2,500, and the cap was reduced from £50,000 to £35,000. Then again in December, it was cut to £1,500, and with a new cap of £32,000. So that actually meant less than 25 EVs, different models, actually qualified for the grant.
Yeah, and I think there is I suppose the question with this is being a little bit facetious in many ways. Is you know they make a comment about how much influence it is having on the growth of EVs, and that we've seen a significant growth in EVs. But how much is that down to supply? That is that EV growth influenced by?
Yes.
We know that Tesla saw some significant performances in the early days of the supply challenges, and it's because they had supply. It wasn't necessarily that Tesla was outperforming its peer groups. It was just the fact that that was what was available. So therefore, it increased its share, and it begs the question of how much this growth. It's obviously is growing because of this appetite towards EV, but how much of it is being accelerated due to supply constraints and a shorter marketplace for it to enter. So, but I think you're right. I think the big it was, like I say, I got a number of phone calls about it. If I knew any more details on the announcement, asking that, well, we've got all these orders that they've taken, because I think you said it was it from 2 days before, which would have made it the Sunday and the
Sunday,
Monday,
yeah,
because it was
yeah.
announced on the Tuesday that they've dealers still had orders that they've not placed on the system because they have to get them onto the system and identify that they are grant incentive vehicles, and put that on the order there, that it wasn't just an automated system. So it was, I think it caught a lot of people off guard more than the actual risk of its influence on the purchase of EVs. It was more the fact that, could you not give us a little bit of notice to do something about it? But it's just one of them things. Into it, like you say, we knew it was coming because it wasn't intended to last forever, and DFT clearly points out that it was a temporary grant incentive to help the acceleration of EVs.
And it wasn't just dealers who are unhappy with it. There's a comment in this story from Mike Hawes, the chief exec of the SMMT, who points out that we are now the only major European market to have zero upfront purchase incentives for EV car buyers, yet the most ambitious plans for uptake.
Yes, yeah.
Discuss.
And we've nothing on used EVs like other markets have got as well. But we're not doing our bit for the uptake of EVs. It does question that whether that 2030 target is going to be achievable at the current rates. But debate from there, I suppose, in many ways. But moving on, and don't know, I think we went from a Ford Fiesta, and it's quite interesting because we're going up to AM Online, and this is talking about Ford closes order book for new Fiesta to tackle car production issues. Now, we know that the Ford Fiesta has been challenged in terms of supply. It was always there in the top 10, if not top 5 of registrations, wasn't it, at the every month from the SMMT there, and it's not been in there for some time. But actually, and they've axed it. They've closed the books on ordering now because they just can't get the vehicle through production to supply to the marketplace. And I don't know, it's one of Britain's best selling vehicles, isn't it, over time?
Yeah, and we were only talking about this last week when we were going through the May registrations, because Fiesta didn't figure in May or year to date in the top 10 best-selling vehicles. And let's not forget, for a period of 12 years, I think it was 12 consecutive years up to 2021, the Fiesta was the UK's best-selling car. And it isn't anymore. And for the reasons we outlined last week, because Ford is prioritizing other vehicles in terms of where it places its chips, and the Fiesta has gone very much to the back of the queue. And we were discussing this last week and speculating, I guess, that that was because the margin on a Fiesta isn't as great as it is on many other Ford vehicles. So it was being put very much to the back of the queue. So within this story, AM have spoken to Ford GB, and Ford GB have said that dealers in the UK have actually taken enough orders for 6 months production. So it's now up to Ford as a manufacturer to work through those orders rather than taking new ones. So anyone looking to buy a brand new Fiesta from scratch in a dealership from today is really looking at sometime next year before they can place an order.
Yeah, that's it. If they,
Yeah.
if they do open the order banks again, I mean, 6 or 12 months today at the minute is a very long time with what's happening. And we talk about the agency model, we talk about some of the manufacturer strategies, and that, and as you said before, that move towards more premium end or higher end, more profitable markets. That, you know what? I don't know. Beg the question: will the Fiesta return in its current guise or not? Will they open the order banks? You don't know these days, do you? Things can move at such a swift rate. It'll be. I know Darren touched on it a little bit on the interview earlier,
Yeah.
but it'll be interesting what this does to the values of nearly new Fiestas in the marketplace, and what influence that has if you can't get one at all. It's not a case of a long lead time; they're just not ordering them at all at the minute. So, yeah, one to watch on this one.
Yeah, and just to finish off on that story, the spokesperson from Ford actually says that Focus deliveries have been significantly affected as well. So I think the Focus is another model we just need to keep our eyes on, because this could be affected in very much the same way that the Fiesta is.
Definitely. Well, you're listening to All the Chatter That Matters on Motor Trade Radio podcast, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from right across the media, available on demand wherever you are on your podcast feed.
Now we've got some financial news. So if we go over to Car Dealer and start with Motorpoint, the headline there is: used car supermarket chain Motorpoint sees pre-tax profit more than double to £21.5 million, with 60% of sales made online. So, I mean, this is a phenomenal year end for Motorpoint. So they enjoyed, as I say, 122% rise in pre-tax profits. So that was to 21.5 million, and that's actually up from 9.7 million, just to give those figures a bit of context, with 60% of its overall sales coming from online channels and revenues topping £1 billion. So that is for the full year to the end of March 2022.
Yeah, and the other big number there is that 60% of overall unit volumes coming from online channels, as you say there, and they're saying that the e-commerce revenue grew by 43% to 624.9 million versus a 437 million over the same period last year. So, looking at what does make this very interesting, Curtis, is you're looking at 21 versus 2020. And 2020 was the period where we had significant lockdowns,
Yeah.
where you could only buy a
Yeah.
car online, and they still grew
Yes.
43% year on year. So they've grown significantly there on that performance, and it does go against some other commentators in the market and other interviews that we had about that pure online ordering of vehicles, that they do seem to be proving that there is a market for that online for used cars.
Yeah, and I guess the key to this is that they do operate bricks and clicks, don't they? Unlike some of its disruptive competitors that we've been talking about a lot over recent shows, and they've achieved a phenomenal success there through their online sales operations. I was interested to see that in terms of totals, it sold 97,700 vehicles over the course of the year. So that was up 44.7% on the previous year, which was 67,500. Days in stock fell from 67 days to 54 days. And over the course of the year, Motorpoint opened 3 new sites in really strategically significant regions. So Manchester, Maidstone, and Portsmouth, which takes its total headcount across England and Scotland and Wales to 17 sites. So that is a formidable business.
And they do point out that they did repay their furlough money back to the
Yes.
HMRC as well. So again, on the back of that, phenomenal performance, and like you say, still investing in growth plans and demonstrating a significant growth in that e-commerce online environment as well, which they've proven to do very well with over the years, but obviously putting a lot of effort and focus into that one. So great performance there from Motorpoint. Well done, guys.
And heading over to Motor Trader for the next story, the headline there is Stephen Eagle reports record turnover and profits for 2021. So turnover for the business was 703 million. That was up from 514 million in 2020, representing a 37% increase, while gross profit for 2021 was 104 million, up from 76 million in 2020. Now, Stephen Eagle, it's a fascinating business. They operate 22 sites. They are Solus, Toyota, and Lexus, based in Milton Keynes. Actually launched. It's coming up, I think, for the 20th anniversary of the group, launched by Stephen Eagle, who still runs the business, based in Milton Keynes, but operating across Essex, North West London, up to Norfolk, and up to the West Midlands as well. So, that really is a good business, good solid business, which obviously enjoyed huge success over the last financial year.
And it looks like they are staying with Toyota as well, because they have said that in 2022 the plan is embarked on Toyota Retail Transformation Program, which means they're committed to be investing and upgrading all their showrooms. So all the 22 locations will be transformed, starting with Birmingham by 2025, June of 2025, and obviously pointing out that that will be a significant investment from the Stephen Eagle Group in its Toyota representation. So I think big plans for these guys, and obviously a pure headline commitment there that they are staying with Toyota for the foreseeable, aren't they, with that?
Yeah, although I'm sure there's other brands knocking on Stephen's door on a
There will
daily
be
basis. Yes, yeah.
with that performance.
Yeah. Next headline, also from Car Dealer, and it's Ancaster Group directors delighted after firm announces record profits for 2021. So this is the third financial story for this show, and directors at dealer group Ancaster say they are delighted with the firm's performance after accounts revealed record profits in 2021. So within the Car Dealer story, it actually itemizes where the profits came from. The firm turned over £145.7 million, which represented a rise of more than 20% compared to 2020's 121 million. And as a result, profits also rose to their best ever levels for the group, with gross profits reaching 25.1 million, which was up from 21.1 million in the previous year.
Again, I mean, this isn't a group that you hear too much about, but they are a significant player, particularly down south, and I'm talking that from where I am in the northwest there. So, they are a great operating group. You do, when you do hear something from, it's normally great investment or great performance, isn't it, from these guys? But still investing. There with the 7th Nissan dealership near Heathrow Airport in November. And look like they've got plans as well to continue growing where possible. But again, great performance there from these guys.
Yeah, they also debuted with Renault last year, and you say they're southern based, but they're actually northern
Yeah,
for me because
yeah.
they're based in South London. But yeah, it is an impressive business. I know them reasonably well because they are close to me. They're based in South London. They operate 13 sites, and I think it's about 16 franchises, and that's across South and West London, up to Berkshire, down to Surrey, and in Kent as well. So, a good year there. Very, very good result for Ancaster.
Yeah, definitely. And the final story, as you said right at the start there, this is from AM Online. We talk about inspirational motor industry leader Jim Tyrrell dies aged 60. Now, I've not had the pleasure of meeting, I didn't have the pleasure of meeting Jim, knew of him, knew his name. Obviously, you can't not with this industry, but you had the pleasure of meeting him once, I think, when you were at Motor Trader many years ago now,
Yeah,
Curtis.
yeah.
But again, he's got a fascinating history there, hasn't he?
He has, yeah. I actually met and interviewed him a number of times over the years when he joined Mitsubishi as managing director in 2020. And I was always struck by he had a very, very clear vision for the brand. And, if you rewind to where Mitsubishi were in 2000, they came a long way under his stewardship. And I'm really thinking of the way that Shogun really transformed 4x4 sales, and the L200 pickup, of course, huge success story there for Mitsubishi. So, yeah, it's very sad news. It was unexpected. He was aged 60, and there's a very good tribute in the AM piece, and also car dealer. There's some really good comments in the car dealer story from various people who worked with Jim over the course of his career. But by way of the background, Jim started at Ford in 1985 as a sales and marketing graduate, and within Ford, he took on a number of senior management roles, including marketing manager for Ford of Great Britain. He was also marketing director for Mazda Motors Europe, when, of course, Mazda was part of Ford. But he is very much best known as the MD of Mitsubishi, which was from 2000 to 2009, and really played a pivotal role in transforming the brand in terms of the products I mentioned, bringing those to market, but also expanding the dealer network. And we know of many successful Mitsubishi dealers out there who would have got to know Jim very well during that period. And after he left Mitsubishi in 2009, he was actually appointed as an advisor to the board of the Paisley-based Phoenix Motor Company. So that was in 2011. That was prior to it being bought by Arnold Clark. But of course, more recently, he's been the chairman of SsangYong. And he was very much appointed to turn around what was a loss-making business. He brought in a largely new team and addressed all the areas of the business, including restructuring, repositioning the products, refreshing the dealer network, and relocating the team. So over a 4-year period, the company went from loss to profitability under Jim's leadership there. So it is a very sad loss. And there's some nice comments from Lance Bradley in the AM piece. Now, Lance took over from Jim at Mitsubishi as MD, but he'd worked with him prior to that at Ford. And he said he was unbelievably sad to hear the news. And he said, "I'd known Jim for 33 years. He was my second boss at Ford 2 months into my career. I followed him to Mitsubishi and learned pretty much everything I knew about the auto industry and leadership from him. This is unbelievably sad news." So obviously our thoughts are with Jim's family, friends and colleagues at this very sad time.
Yeah, like you say, I mean, just looking at some of the comments there from various industry leaders across the sector, they obviously in one form or another managed to either work with or was involved with Jim in one way or another in terms of the represented brands that he touched through his career. So again, another sad loss to the industry, that they've lost another significant leader to the industry. And that's it for this week, Curtis. We got a
It
bit of a
is, yeah.
busy headline week, considering we got the interview there with Darren, hot off the press there, to talk through the AM report. But again, like I say, do listen back to that. Do tune into this Steve Young interview if you did manage to miss that by any chance. Still available on downloads, or check our social feeds, and you'll see the link on there that we would have shared. And like Autotech, if you have got a media release that you'd like for us to read out, please do get in touch. Drop us it in email or through one of the social channels, and we'll gladly give it a shout on the podcast.
But that's all for now. You've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors Group. Many thanks for joining us for all the chat that matters. We're back again next week. Until then, it's goodbye from me.
And it's goodbye from him.